Imagine getting your first paycheck. You were promised $5,000 for the month. But when the money finally arrives, only around $4,100 lands in your bank account. The rest is gone. Federal income tax, Social Security tax, Medicare tax, sometimes even state income tax. Where did all that money go? Who decides how much you pay? Why do two people earning almost the same salary sometimes pay completely different amounts in taxes? And perhaps the biggest question of all, what are you paying more tax than you legally have to? By the end of this video, you'll understand exactly how the U.S. tax system works, from your paycheck to your tax return, in simple English using officially verified IRS information. Let's begin. What is the U.S. tax system? Every modern country needs money to operate. In the United States, taxes help fund many public services, including roads and highways, public schools, national defense, Social Security, Medicare, law enforcement, emergency services, national parks, scientific research, and many other government programs. Instead of charging every citizen the exact same amount, the U.S. government generally collects taxes based on income, spending, property ownership, and certain business activities. For most Americans, the largest tax they pay each year is federal income tax, which is administered by the Internal Revenue Service, commonly known as the IRS. But federal income tax is only one piece of the system. Many Americans also pay state income taxes, payroll taxes, property taxes, and sales taxes. Understanding how these different taxes work is the first step toward making smarter financial decisions. Who actually pays taxes? One of the biggest misconceptions is that everyone pays the exact same taxes. In reality, the taxes you pay depend on your personal situation. For example, an employee working for a company usually has taxes automatically withheld from each paycheck. A self-employed contractor often makes estimated tax payments during the year instead. Some retirees continue paying federal income tax. Others may owe very little or none at all, depending on their income and applicable tax rules. Business owners follow different tax rules than wage employees. Even students with part-time jobs may have filing requirements depending on how much they earn. In short, there isn't one tax system for everyone. There is one federal tax system, but many different rules apply depending on how you earn your income. That's why understanding your own tax situation is so important. The four main taxes most Americans encounter. For most people, these are the four taxes you'll hear about most often. 1. Federal income tax. Curious. This is the tax paid to the federal government based on taxable income. The IRS collects this tax each year. 2. Payroll taxes. Curious. If you're employed, you'll usually see deductions for Social Security and Medicare on your paycheck. These payroll taxes help fund important federal programs. 3. State income tax. Many states impose their own income taxes. However, not every state has one. The rules depend on where you live. 4. Sales and property taxes. Current. Sales tax is generally added when you purchase goods or certain services, depending on state and local law. Property taxes are commonly paid by homeowners and help fund local services such as schools and emergency services. Each of these taxes serves a different purpose, and together they make up the overall U.S. tax system. How tax brackets really work. Let's clear up one of the biggest myths about taxes. You've probably heard someone say, I don't want to raise because it'll push me into a higher tax bracket. It sounds believable, but that's not how the U.S. tax system works. The United States uses a progressive tax system. That means different portions of your taxable income can be taxed at different rates. Think of it like climbing a staircase. Each step has its own tax rate. You don't suddenly pay the highest rate on your entire income just because you move to the next step. Instead, Only the income that falls into the higher bracket is generally taxed at that higher rate. This system is designed so that taxes increase gradually, not all at once. Understanding this simple concept can help you avoid one of the most common financial misconceptions in America. What is taxable income? Here's another important term you'll hear every tax season: taxable income. Many people think taxes are based on every dollar they earn, but in many cases, that's not true. Your gross income is generally the total amount you earn before taxes and certain adjustments. Your taxable income is the amount that remains after applying eligible deductions and adjustments under the tax law. This difference matters. Because your tax bill is generally calculated using your taxable income, not simply your total salary. That's one reason why two people earning similar incomes may owe different amounts of tax. What is the standard deduction? One of the most important tax benefits available to many taxpayers is the standard deduction. The standard deduction reduces the amount of income that's subject to federal income tax for eligible taxpayers. Every year, the IRS updates the standard deduction amounts. Many taxpayers choose the standard deduction because it's simple and often provides significant tax savings without needing to itemize deductions. Others may qualify to itemize deductions if that results in a larger tax benefit. The right choice depends on each person's individual circumstances. This is why understanding deductions is so important. They don't necessarily reduce your tax rate. They reduce the amount of income that's taxed. Tax deduction versus tax credit. Curious. These two terms sound similar, but they work very differently. A tax deduction generally reduces your taxable income. A tax credit, on the other hand, generally reduces the amount of tax you owe directly, if you qualify. That's why tax credits are often considered especially valuable. Many taxpayers confuse these two concepts, but once you understand the difference, reading your tax return becomes much easier. Real-life example. Imagine two friends. Both earn $60,000 a year. One claims only the standard deduction. The other qualifies for additional tax credits and deductions based on their personal situation. Even though both earn the same salary, their final tax bills may be different. That's why tax planning isn't about hiding income. It's about understanding the rules and using the tax benefits you're legally eligible for. What happens after you file your tax return? Once you submit your federal tax return, many people imagine an IRS employee immediately opening their file. But that's usually not what happens. Today, millions of tax returns are processed electronically. The IRS first checks whether your return is complete. It compares the information you reported with documents it has already received from employers, banks, and other financial institutions. If everything matches, your return usually continues through the normal processing system. If something doesn't match, the IRS may request additional information or corrections before processing continues. Most taxpayers never hear from the IRS because their returns are complete and accurate. That's why reporting information correctly the first time is so important. Common tax filing mistakes. Every year, many tax returns are delayed because of simple mistakes. Some of the most common include typing an incorrect Social Security number, using the wrong filing status, entering incorrect bank account information for direct deposit, forgetting to include required tax forms, mathematical mistakes, or simply filing after the deadline without understanding the available options. Most of these mistakes are completely avoidable. Taking a few extra minutes to carefully review your return can save weeks or even months of delays. Accuracy matters just as much as filing on time. Smart tax habits everyone should follow. Whether you're filing your very first tax return or you've been filing for decades, these habits can make tax season much easier. Keep important tax documents organized throughout the year. Save copies of your tax returns. Review your paycheck occasionally to understand your withholdings. Use only official IRS information when researching tax questions. And don't wait until the last minute to prepare your return. Good tax habits don't just reduce stress, they also help you avoid costly mistakes. Today we've covered the foundation of the U.S. tax system. You learned why Americans pay taxes, the difference between federal, state, payroll, and sales taxes, how tax brackets really work, what taxable income means, the difference between deductions and tax credits, what happens after you file your return, and the habits that can help you stay organized every tax season. The U.S. tax system may seem complicated at first, but once you understand the basics, every future tax season becomes much easier to navigate. Knowledge doesn't eliminate taxes, but it helps you understand the rules, avoid common mistakes, and make informed financial decisions.